So in this presentation, I'm going to teach you what's the really order flow, because there's so many different versions, and depending who is teaching you, depending what indicators they sell, depending what kind of guru it is, what kind of school, what kind of mindset, what kind of ideology, is that an outdated ideology? Even I'm a baby boomer, but I'm going to teach you the cutting edge. What is the order flow right now? Today, okay, not the outdated teachings from the others, because I couldn't stand them. And the reason is why I couldn't stand them emotionally, because they only teach based on the indicators they're selling to you. Okay, now it's going to be completely different view and the paradigm of the what is the order flow from A, B, C. Okay, I want to teach you what's the actually order flow, because this term is very misconceptual, very misunderstood by many. Okay, now just to listen, one of the most famous person who's teaching about the order flow on YouTube, and he's saying the order flow is the what is the footprint, and I'm like what? How could you? Because let's give a proper and a correct definition. Now, when I'm going to give you that presentation or any tutorials you're going to watch, always look at the definition. When you have a definition, it's not going to be a blondie version of the presentation, not the blondie version of the footprint or the blondie version of the order flow. Okay, it's going to be a mature and objective pieces of information, especially a definition. Now, what is the order flow on this slide? As you can see, there's a price action as called as a traditional model, right? Okay, let me take the drawing tool out here, because I would like to highlight what I'm talking about. Okay, now, if we're talking about the traditional model, which is represented with the price action, when you see only candles like this, that's what people take as the most common view to analyze the chart, because the most common platform right now is the trading view. Trading view is the platform for newbies, okay? It's really sexy to draw something, to see the candles, to see the ranges, to see, you know, all of this kind of jazz, because they really make it so pretty, so juicy, so nice, so easy, friendly to draw on the chart and make analysis, but only by the traditional model, which we call the price action. So that is the price action model. When we're taking a look and dive into the traditional price action model, what we're gonna see, what is traditional or price action model is really targeted to show us. It is targeted to show us, for example, this is the candle, right? What this candle represents, we're gonna see where this candle is actually, the prices started right over here, then we went down, and then we went higher, and we end up lower than the high. So now we have a few points right over here, right? What are those points? Those points are, like you can see over here, where we started, where we ended. We can see the high, we can see the low, right? So that's the only information that is traditional model or chart analysis are built on. One candle or a series of the candles. And now you can see the structure built based on those candles, like this is the low, this is the high, this is another low, this is another like high over here, and there is another unexpected low over here. Now, that's the external points. So the traditional way to make analysis by outcome. What's the value over here is the final outcome of the price, okay? So the final, not what being in between and why the price actually moved, but now we're making our decision by, okay, the price is actually now stuck over here or over here, lower or higher, because there it is, we can suppose there's a resistance. Maybe there's some kind of like a reason why the prices couldn't move higher or lower, but we have that based on the low and high. This is called extremums. Okay, so this is a set of extremums below, and this is a set of extremums above. So based on the candles and the time frame, we can compress the time frame into the higher time frame, and we can make our judgment and evaluation. Okay, now, but this is basically the whole strategy is based on the based on the appearance of the individual candles or set of candles in ranges. So it is the outer appearance, okay, the way that it looks like. Okay, now, so this is the external structure. Okay, so this is a traditional model, but the key is that many people coming to me and saying, okay, it's not that because they like ICT or don't like him, it doesn't really matter, but they're saying, I feel that there is some missing piece. And what is the other missing piece? Because this is the price action traditional model, and there is the order flow model, and that these two models, they are not the same. Although I have to say in a short that the best traders, as far as I know, they capable too much in their brain or in their perspective or view or paradigm of trading, both systems, and traditional and the order flow. Now, the traditional model is everybody is getting sick out of the pure price action, because no matter how much you put your efforts in traditional model, there is some pieces of information that you're seeing that it's you craving, it's not there, it's not there, something that is not enough, or those patterns, external patterns based on the external structure, doesn't work always in every market, in every structure and every instrument, because the market and can be in different phases and all of that. So the market is always live, okay? Although you can see, for example, I just was seeing the video 5 minutes ago that there's a one guy who evaluated order blocks, and he's saying, yeah, order blocks works on the 1 hour on the crypto, okay, on a Bitcoin, but nowhere else on the futures or on the Forex, it doesn't work, according to his study for many, many, many years. Okay, so now, so that means it is the part of the traditional analysis. Now, what we actually, with the order flow, what benefit we can add to the traditional perspective over here. Because the order flow, if we give the proper definition, what is the order flow? And just to listen what you're saying. Just listen what you're saying. Because if you're not listening what you're saying, you will come up with somebody's bogus, pocus, schmocus, whatever the Circuit City, okay, definition, okay, based on what they're selling. Order flow is order flow of orders in any indicator that is capable to produce you flow of orders is the order flow indicator. Okay, so the order flow is the way that we can measurably detect at least 3 parameters. Okay, how the orders, amount of the orders, size of the orders, time of the orders, position of the orders, and the side of the market. Because for people who trade Forex, there is only 2 sides, okay? They believe that there's a buyers and sellers, and that's only in the mind of the Forex trader that I was a long time ago. There's actually there's 4 participants in the market, not 2. So when we measure who is acting, then we can see who is in control. You see this over here? Who actually is in control in the market, buyers or sellers? So the order flow purpose, and the key here is the purpose, is to reveal the cause of the price shifting. Okay? What actually inside of the candle bar is moving the price one or opposite direction. What actually moving? Why? What is the cause? Okay, now depending on the cause, we can make our own conclusion as a traders. Now, when we know who is in control, like in this candle on a traditional model, do you know who is in control over here? Have no clue. You're just saying that, okay, the bar is moved up. But do you know if there is maybe low of volume sitting right over here? Do you know that after moving up, this next candle will move into the middle of that and only then will go higher? No way. Or maybe the movement will go down lower over here because there is some trapped sellers sitting right at the very tip. There was absorption. Could you see, just by looking at the traditional model, could you see absorption? Could you see exhaustion if the buyers or sellers just exhausted? They're giving up. Okay, or trapped traders, buyers or sellers. Traditional models not capable to show you all of that. And now you're like, oh, dude, now I see that somebody is trying to sell or buy, but they're being absorbed. Oh, dude, next phase is what? Exhaustion. Okay, this is phase number 1, by the way. This is phase number 2, okay, exhaustion. And trapped buyers, it's not the phase, but it may be where the price always going to or going from, okay, or going from. So this can be a magnet. Trapped buyers or trapped traders can be another type of resistance or support or the magnets. This is something that traditional model never capable to show it to you. Absolutely. But the trapped traders, buyers or sellers, can be a significant objective for the price to return. Why price is returning to the same spot? Guys, one of the reasons is because there is a trapped buyers or a seller sitting there or there. And they're not giving up. If there is a significant trapped buyers or sellers, it become a zone like a magnet. And the price needs to come back to them, at least to mitigate, to touch that zone. So to release those trapped, so they're not gonna exit by margin call. That's why this is the force that actually moving. It is the objective. The price have, in my mind, objective. Why the price is going one or another direction? Because of the trend and because of the objective, like trapped traders, okay? So in my paradigm, in my school, it's really huge. Now, the price action is not able to show nor absorption, nor exhaustion, nor trap traders. But the order flow indicators, like you're seeing right over here, is actually capable to show you what is inside, okay? So the yes is related to absorption, exhaustion, trapped traders, and many other, by the way. This is just a few. So it shows you what is inside of the candle bar, what is inside of the structure, okay? And now, if we're taking a look on the left side, traditional model right over here, we get oriented on the extremums, like this is low and this is high and this is another low over here, right? If we get oriented simply by the low and high on a traditional model, now we will add. We're not going to discard that, okay? This is still important. This is always needs to be looked at, okay? But now we're going to add a reason why sometimes price is dancing in such a weird way, okay? Like on some remote island, people dancing the way that you've never seen, and that's the way the price is dancing, and you're like, what is the heck? Why is that so? Because people on a price action want to say, oh, there's an inducement. There is a price try to deceive you, okay? Price try to shave the stops. All of those concepts will actually gone from your head and clear your mind. You will see the better reasoning when you switch to the order flow thinking, because order flow show us what is inside, okay? What is inside, buyers, sellers, there's some delta, there is something coming on inside. And now instead of working and thinking only based on the structure points, up and downs, now we have another new variation. It's called the volume. Okay, this volume, this is the maximum volume. Imagine that this is the volume profile right over here for this very candle. Okay, let's say this is a daily candle. Okay, now, and this is the maximum. It's called the point of control, POC. It's a maximum volume out of all of that situation or candle over here. And we can see there's a lot of volume over here. There's a low volume over here, and there's a maximum volume over here. Now, instead of building your structure simply by outer points, you can see in individual candles, the volume gonna shift higher and higher and higher, lower over here and higher and higher and higher and higher, lower over here, and the higher over here. Now you will add that as the factor, and when you add that as the factor, your trading will completely change. Okay, because you will see more cofactors in your system that you will say, oh, based on the struggle where the maximum fight in a candle happens, you're going to say, oh, too early for me to enter, too early to execute. Okay, or it is like, let me wait, I need to wait, I need to see who is in control, like over here, who is in control of the market, buyers or sellers. And when you see that the buyers actually, according to other cofactors, according to the major trend, is more in control, bingo, set of the cofactors and order flow indicators give you decision that is based on the solid data. And because all of these indicators, they work only on the data, not by guessing, not the outer or external structural points or appearances, okay? And this is just like, that's exactly what is the missing point in the traditional price action way to evaluate or read the charts or make sense out of the charts, okay, out of the price, why the price is going this way. Although there's a lot of good valid points in the price action. There's a good companies, good institutions that teaching price action one way or another, but I crack my head, okay, I almost open my head to actually learn all of that and make sense out of that. On the outer way of looking, from the external way of looking, it makes sense. But it makes double sense when I have what? I see the order flow, okay? Then it makes really good point and sense. So the order flow, what is the order flow? Order flow, like in, let me clear up a little bit over here. Order flow is details who sellers, who buyers, what price level, what the time, and in a what volume or amount. Actually, I deleted this one a little bit, right? Like amount over here, large amount of volume, okay, right over here. You can really rely on those details, buyers and sellers. Although you can see this, if this is the footprint, for example, this is the only one side of the market. You can see the other side of the market as well. Without the order flow, like in a traditional model, you can see only one side of the market. Okay, let's go to the next slide. And this is something that I already explained it a little bit, but this is again, what is the order flow and a little bit more details. What is the purpose of the order flow? Again, the order flow giving us the missing pieces, what actually is the cause of the price shifting, and who is in control of the market, buyers or sellers. Okay, at any given candle, at any given range, we can see this data. Now, but on this slide, instead of just like a candle over here on a traditional sense, and you can see now the same candle give you more information. This is the footprint indicator, okay? On a footprint, you can see sellers right over here in this column. You can see buyers right here on this column. You can see if the buyers, for example, they highlighted in bluish instead of green colors, like the others nearby, that this is significantly outweighed sellers. When they significantly outweighed, this is called the imbalance. So this is a single imbalances on every price level, okay? On every price level, price is somewhere like over here. And you can see those imbalances, individual imbalances. And when you decide to, let's say, okay, if there's like 3 or 4 of them in the row, you can see that becomes the zone, okay? That becomes a zone. The problem with this one, because this one is not really significant, so it's not created the zone over here. Now, you see that you are actually seeing that this is actually really a feast from the on the buyer's side. We are really fighting over here. We are really kicking ass from the sellers. Okay, we are really significantly improving and getting in. So when the price will come back, what do you expect? Do you expect to wake up these buyers? Yes, exactly, sir. So that is now become a significant zone for you to consider the price will react if it will come back to that level. Do you see this over here on a traditional price action candle? Never. Okay, until you see another candles build you like structure, like what they telling you, like 3 candles, and there is like a 3 candle structure, right? And if this is according to the 3 candle structure, and you're seeing this third candle over here, okay, now you're seeing that there is a gap, and that's what they call the FVG, right? Now, FVG, but they don't have the way to distinguish the true FVG from the fake or false FVG. Like here, this candle inside have a significantly higher amount of buyers, and it's gonna become a resistance zone. Okay, so that's why when price is coming back, people saying we trade FVG. You really trade FVG? You may trade FVG over here, but you don't understand that behind that FVG, okay, there is significant amount of the buyers as the zone. This is the imbalance zone or imbalance buyers. That's whom you trying to wake up, and they saying, no, I'm still alive. I'm going to add more into the buying position. That's never possible with the traditional model, like you can see that on the left, okay, on the left, right over here. This is impossible. So now, and I already mentioned that these zones become other support and resistance zones based on the volume, not on the guessing. Why the people now disappointed with the ICT or price actions? Because there's a lot of guessing over here, a lot of guessing, just like huge amount of guessing. So now what we're seeing on the order flow, that the order flow, just by looking at this footprint over here, one candle provides us X-ray inside of the candle bars on any time frame. It is the X-ray. When you go to your physician, when you go to your dentist, okay, the dentist may look at you, says, okay, turn your head this way. Oh, I see you have the caries on the tooth number 16. No, they're taking X-ray, okay? By the way, I can show you my perfectly good tooth. I have it, by the way. I can show you my perfectly good tooth that is pulling away. And the doctor told me, no, there is some issues. It's going to decay. It's going to die. Actually, 2 years later, I came, and he was quiet about that tooth because the tooth actually was perfect. Do you want to see actually with the X-ray? A doctor saying, no, just turn this way or that way. Oh, I see you have the cancer. How he or she knows that you have a cancer? Only by what? Analysis going deep inside of you. If you're diabetic and you don't have you don't have an instrument to measure your sugar, how do you know? That's why most of the people actually, they're already diabetic. They don't know about that because they never know what's inside. This order flow is detailed structure of the orders. And now you're not only seeing one side of the market. What's over here on the right side of this image of this slide, you can see that this is the passive side of the market. People with the traditional price action view never mentioned this concept of the traditional price action model. Doesn't have the way to see the orders from the other side of the market. Now let's go. And by the way, let me clear up, and I'd like to simply make a conclusion, and I want to drill that conclusion in everybody's head. Okay, drill it. I mean, there's no less than that. Okay, that any indicator that shows you volume, price, and the side of the market based on data is the part of the order flow. Okay, this is what the order flow. It can help you to analyze and see the factors or cofactors into your trading system. Because if you see the other cofactors, you can more precisely place your stop loss or place your take profit. So it gives you efficiency. Why do we do this? Why do we do this order flow? We want to see deeper. We want to see X-ray, what's inside. We want to see other factors, what moves, what takes over, buyers or sellers, because we want to trade with a better certainty based on data and make our stop losses in a more appropriate position or take profit in maybe a larger or a smaller, but being like more in guarantee where your system will work more efficiently. That's why we learn about the order flow. The order flow is any indicator that shows you based on the solid data. Over here, you can see the solid data. It is just a structure in a traditional model, but now we including the volume. Okay, like this is the volume profile. Now, just by looking at this volume, I can say, aha, what's going on right now? The price was struggling over here, but able to overcome this maximum volume. Okay, and now it's trading right over here. Will it go over here? There's a better chances. Okay, price was rejected over here, not just by the structure of the candle over here, but because we're seeing this is above the major or maximum volume fight. Okay, because this is a max, right? We know that there is a more chances now. I need to see if the price will react, retest, and go over there. That's my expectation. But based on only on the traditional model, it is really hard to make that kind of the conclusion. So this slide is, again, it is repeating that this is the order flow, add another coordinate, add another, you have not only flat Y and X, you can see now Z option, okay, or like a depth, okay. This is actually adding you depth in your any trading model that you trade, okay. Let me go to the next slide. And the order flow is only possible when we have the solid data. You see, there's two markets out there, at least decentralized the markets. Okay, market or exchanges, we can say decentralized exchanges, and this is the Forex and the crypto. Every crypto exchange, like, whatever you name it, they say, oh, we are the biggest. That's why the price on the Bitcoin or a crypto is defined by looking at us. Or the Forex, okay, they decentralize it because they can exchange in a data, they can exchange in a dark pool, in a dark pool, and the way that they exchange can be very different, okay? So there's a banks that exchange it with another banks, and sometimes they do it without any reflection on the chart. So now, like, there's a lot of guessing exactly. What do you rely when you trade the decentralized exchanges? You rely on the price action because there's no data for the order flow, unless some currencies you can trade with the futures on that currency. But the key word is the futures. That's why people don't understand. Why do you trade futures and I'm trading the currencies, CFDs? Because the difference is really huge. The key is for the futures is the data, because data now coming out of the CME, for example, is centralized exchange where everybody, you and me on any side of the planet, when you put the order on the real exchange, I see your order. You can even sometimes in Asian session, you can call me on the phone and say, hey, Oleg, could you put like 10 lots or orders in volume on this particular instrument? I want to see it. When I put it, you will see it. I put it way above, or way below, so the market not going to trigger instantly. And you will see it. Oh, it's right there on that price line. That means the Forex exchange brokers, they prone to manipulate and sometimes deceive, because you trading against the Forex brokers. Their model is they trade against you. When you put your order, they instantly put opposite order against you. So they're not interested that you win. Okay. Why do we trade futures? Because the futures is coming out of the CME data, CME exchange, okay, because it's a centralized exchange, and they give you even if you trade the US dollar against the euro as the futures, bingo, you're gonna get it based on the data. That's why the bigger money or more reliable trades can be done based on the futures. That's why people like that. And futures include indexes. Futures include some, particular, meats, gas, oil, other products, corn, whatever, and indexes as S&P and NASDAQ and S&P, one of the favorite for the people. Why? Because they tend to go up only one direction. And when the market is one directional, not like the Forex, just like euro is just jumping like that, like crazy, you get tired of that, okay? It's unpredictable. Now, futures are more predictable, and it's easier to trade them, and it's easier to make sense out of the futures. So now that's why what we do, we trade the order flow based on centralized exchange, CME, for example, right, where the data is coming from every other source on the same exchange, and you can see all the data from different sources on the same chart right in front of you. Okay, so that's the difference basically between this decentralized exchanges and the centralized exchanges. That's why the people now understand. That's why I stopped long time ago. I started with the forexes. Most of the people probably, or with some crypto. Okay, but there's no centralized crypto exchange like CME exchange. Now that's why, and I switch myself to the futures to get more reliable outcome. And trade based on what? In data we trust. And this is my motto. In data I trust. Not only in guessings, not only looking at the structure and extremes up and down. Yeah, it makes sense as well because it's a final outcome, but I want to see what's inside, and I want to trade microstructures because the pullbacks is my favorite. Pullbacks is like, it's just like so nice. Okay, anyway, and this is what on this slide, I think I covered that really well. Only centralized markets, by the way, can show you the full depth of market data accurately. So, and this is super important to talk about the depth of market data to be able to read accurately, because some platforms that you're using like MT4, MT5, CTrader or Ninja or whatever you use are capable to read the data in a different degree. Okay. Now, on this slide, please make a screenshot of this slide because this is really huge. This is really big. Your paradigm will shift from Forex thinking, Forex mindset, from the price action mindset to the order flow mindset, because order flow is not only the data, but the way the data interacts. Interaction of the data is the key. And now, what is at the very core of the interaction of the data on the auction? Okay, it's not action, auction. It's like the car dealership. You're going to the whatever the lot, and you want to bid on one car or whatever, you want to buy this house or a car, and somebody going to tell you, okay, this price, okay, going up, going down. And this is exactly what the market is doing. Market is always fighting, and looking what the price is beneficial to sell or to buy, or is not beneficial, and on both sides of the market. Now, on the left side, you see these people, I want it now orders, they execute the aggressive orders. So this is the aggressive side of the market. You can see it on the footprint as an example, or on a volume profile right over there. You can see it right there. It's reflected here. This is the aggressive side of the market. It is the immediate orders at any proximity price, because when these people want to say, I want it now, they actually losing 1 or 2 ticks in the price right over here. This is the gap between the buyers and sellers on the other side of the market. And the way that market is matching the orders is quite fascinating, by the way. These sellers on the aggressive side, sellers, okay, they matching with the buyers on the passive side. So these sellers, if they if somebody want to sell over here, they match with these guys over here. You see that? They instantly losing right over here. This what they're losing in price instantly. And when the aggressive buyers on the aggressive side of the market, they want to buy, they matching with the sellers on the passive side of the market, because this is the passive or limit orders on the market. It's called the order book. The order, why is that called the order book? Because the prices on the right side, on the passive side, it's like they placed there on the book and they're waiting until the reader will come to that particular point, okay, and read that price. So that's why it is the book or record. So that it is the book of orders, passive orders, sitting and resting and waiting. And so when the buyers want to buy, they buy at the price slightly losing over here, okay, because they buy it from the sell. This is the sellers and this is the buyers. So they're always buying now out of desperation and always losing one or two ticks or price lines, or maybe even sometimes even more. The point over here in the big numbers. So there's a one seller on the aggressive side, and there is a one buyer match with the aggressive seller on the passive side. This is the buyer. Okay, so the sellers matching with the buyers, aggressive side of the market, okay, and there is a passive side of the market. Now the same with the buyers on the aggressive side, I want to buy now, matching with the sellers on the passive side of the market. So now how many participants right over here? Most people told me, look, it looks so simple, but I never thought about that. I never seen that, because it's a very different paradigm. It's a very different concept. And the key is over here, not to remember, but to think as you can think with the order flow, okay? How the orders, these orders, they flow over here, and these orders, they flow over here. The orders don't flow this way. The orders doesn't flow this way. Why is that? Simple question, right? Because passives don't actively sell or buy. They don't move. They simply, let's say you put this order, limit order right over here, and it's waiting until the price will actually come over here. Yes, there manipulation can be happens. There's a pulling and stacking. There's some manipulation that these people will put some orders over here, making impression, and then they can actually remove these orders over here. They can play the game. Yeah, they can play the game. You can see that on the MBO dome. Yeah, absolutely. But it doesn't really bother us if we are capable to read the market appropriately and correctly and seeing those guys. That's why the only MBO is absolutely unique indicator. If you have a correct MBO indicator, then it will show you what's going on at the millisecond on the market. That's why the heat map is really important, but the MBO is sometimes really crucial, and depending on how you trade, by the way. Now, anyway, the point is the market doesn't initiate on the passive side, nor sellers nor buyers. Initiation is only happening from where? Initiation happening from the aggressive side only, okay? So that's another point to take. So only these guys can initiate. Only these guys can initiate. So that's how the market is matching the orders. And when the orders is matching, the data is flowing from one side to another. This is the order flow. So what is the order flow? Again, we need to ask ourselves, how do you see the order flow? Let me ask you a simple question on the very next slide. How many indicators do you see on this very slide that reflects the flow of orders? For some of you who never seen the chart like that, they were like, dude, there's too much. Absolutely. What is my point? My point is to reply to one of the most famous explanation of the order flow, that it is the footprint, saying, stop deceiving the people. If you trade only volume profile and footprint, stop deceiving the people, because you never experience the other data indicators that reflects the order flow. Now, I put these arrows on the purpose. Okay, what is this? This is the footprint, right? And on a footprint, we can see the imbalance zone. This is really nice, juicy imbalance zone. Price went up to this zone, rejected, went higher, and then went completely through, right? Now, this is another buyer zone. I made it a little bit transparent. Let's see what it is. This is the trapped sellers sitting over here. Or this is the imbalance on the side of the buyers. What is over here? This is the delta in this side of the candle. By the way, we can measure delta, difference between the buyers and sellers, in the fraction of the candle, not to wait like most other indicators show you only after the candle completed, above or below, but we can show it to you dynamically while this candle is developing. This is a really showing you who outweighed, who is taking the, who is out power. Now, let me go to other ones. So what is this line? This is the heat map on a level 2 indicator. This line is the heat map. This is the passive orders that you can see on the right side. They were sitting there for a while. Historically, we can see how long they were sitting out here for a long time. This is even higher volume on the heat map. This is a larger volume heat map. Okay, right over here. It's reflected in red color. This is less volume over here. There's a good volume sitting right here, and we see the time, how long it spent sitting right there. So this is the heat map. This is the point of control right over here. This is the point of control right over here. It is the maximum volume in this candle structure, okay, in this candle. Maximum volume in this candle, for example, if we take this candle, is sitting right here. And now, because we're trading volume, most of the time we can see the structure in volume, who is taking over. You see the point of control is moving. I'm connecting point of control of the neighborly candles, and I can see how it moves. So this is really helpful in trading, in the practical trading. So it's a really nice addition to the footprint as well. You can see the bubbles. This is a large orders. Some people call it big trades, and this is really a big trades. Or you can see those bubbles, not just like a big trades. You can see another variation that we also have. It is the delta bubbles, and we can visually show you in bubbles. But bottom line, it's not necessarily to have the bubbles. You can just looking at the candles, you can see the same story. But bubbles are just a visual way to make decision much faster. Okay, now you can see at the very bottom that what it is. This is actually delta level 2. This is delta level 1 and volume. So the semi-transparent is the volume. Behind that, there's the delta. We united two indicators, one on top of another because delta is usually less than volume. So we save it the space. And below, there's a speed of tape. This is the speed of tape on market side. Now, you're going to say, hey, what are you talking about? There's a delta level 2, for example. This is delta level 2. Now, let's take a look. This is the DOM, okay, histogram for the heat map. All of this, and in between that I filter out, all of this liquidity sitting there for a while is historical situation for the passive orders or for limit orders, and the current situation is reflected on this histogram right now. This is the histogram level 2 DOM here. So with that, you can see activities on a level 2 in real time up to the milliseconds, and you can see the new orders placed over here, and you can see sometimes the pressure will be one way or another way. You can see it on the DOM, and it's really fascinating. So this indicator also on this DOM is called a pulling, when they pull the orders on a level 2, and stacking, placing again, okay? And this is the pulling and stacking totals. So this is really fascinating indicator because you can see on a close proximity to the price who is out power. So this is the pulling and stacking total. This is absolutely delta 2. I mean, of course, it's a level 2 indicator, but not many people even seeing that indicator. what is my point by talking about what is the order flow indicators? All of these indicators over here, as you can see, it is the indicators of the order flow. What is the main key when you see volume, when you see count of orders, when you see type of the orders? That means the aggressive side or the passive side over here, right? Like this MBO DOM, for example, or this DOM over here, right? So you're seeing the two sides. On each side, the order is, and the flow of the data, flow of the orders from one side to another is also what is becoming the indicator of the order flow. And now the on aggressive side, like right over here, we can see a bunch of indicators, which is easy to show you: footprint over here, volume profile over here, delta level 1, big orders, market orders, VWAP, all of this kind of stuff. On the this is the aggressive side of the indicators, right? The passive side includes two types of indicators. Okay, this is the passive side indicators, and this is the passive side of indicators. Okay, usually it is the it's called the book. What is the book depth of book? Okay, now Heatmap, as you see those lines of liquidity lines on the background, those are filtered Heatmap, and delta level 2, as I spoke about, like right over here. There is a pulling and stacking over here. There is a DOM histogram for the tape. This is the DOM level 2. So it shows you passive orders sitting on the book. And you also, with the detailed, and the key is, some people call it level 3, but the level 3 is the nickname for the detailed level 2. It's actually can show you the icebergs. Okay, the icebergs, which is placed by the CME exchange, for example. And you can see the icebergs only with the MBO data or detailed level 2. Now there's the icebergs, there's some other indicators that MBO can use, and you actually can see like this one little sucker out here. You see the white point. This is the refill of the iceberg, by the way. On some other my slides, you can see it in like really large picture, but this is the refill of the icebergs. So we are not able only to show you on chart icebergs, we actually can show you icebergs refilling on the DOM live. You can see how the orders go into this bucket and refill it. It goes to the 0 and it's refill it. It goes to the 0 and it's refill it. It goes to the 0 and it's refill it. This is the key of the iceberg, because iceberg get fatter and fatter and fatter. Okay, so that's really fascinating indicators. But any of these indicators on level 1, on level 2, on level 3, all of those indicators are the indicators for the order flow. So it's not just the one single indicator. Let me go to some of the misconception, because there are some people tell me, hey, there is some big trades, like the one particular company 4 months ago built a big trades indicator, and Fabio was trading big trades indicator, and it's get really big publicity. And then the TDU, like TDU Trade Devils indicators, they actually built their own big trades indicator, and I was just laughing. I call to my programmers and I say, what's going on? TDU is now selling like $300 or $400 big trades indicator. I'm like, what? And they're like, we're laughing because TDU programmers couldn't build the same big trades indicator like Fabio is trading, because Fabio have the indicator based on the MBO detailed data, and there's no one out there who build on the Ninja big trade indicators using the MBO data, because the best order flow is only the company that have the MBO indicators. Period. We are the only ones. So there's some people trying to like go and sell and copy dog and pony show, and I just like, wow. By the way, these companies sell a lot of dog and pony show indicators, by the way, and it's going to be a next, maybe one of the next lessons, key points. My point is, when you buy indicators, what number one question do you want to ask? Does it detect the raw data? Does it use the general formula? Does it calculate it from volume and volume out? Because some indicators that people build and they say, I selling the icebergs, or I sell the MBO, and heck no, They have a calculated MBO and calculated icebergs. It's not the same as if you build it on the granular detection, not the formula over here. Do you see that? Because the granular detection data, that is the ability to read correctly and project correctly on the indicators. Those who calculate, you don't know what kind of guesstimation they do. Okay, they could not detect the high frequency trades, for example, like any other big trades indicators on the Ninja, even they call it a trade detector, not able to identify the frequency traders, high frequency traders on the big trades. Okay, now indicator, but we are able to. We are able to. Why? Because we detect the MBO data. We detect the granular MBO or level 3 data, which is supplied by whom? Not by us. It's not the formula. It is supplied by the what? CME exchange. Okay, so be very careful. When somebody is selling you MBO and it's not best order flow, you ask them, hey, how did you come up? And they tell you, because there's some people doing that. They tell you, oh, we estimate. We have a really nice, cute formula. Yeah, go ahead, buddy. This is all fake, okay? Do you want to rely on fake indicators? Now, there's some other indicators that, yeah, I mentioned you already, like they're selling the fake MBO and some others selling you fake icebergs. Now, this is the icebergs, okay? And they're not saying what kind of icebergs they're selling, but they're selling it for a long time, and it's not a synthetic, by the way. But there's two types of icebergs indicators. One of them is that CME exchange selling their services. If you want to place iceberg, you want to buy that service, and CME will place that, lets you place that iceberg. Okay, so it's a services. That's why CME, the only source, can give you accurate data for the native icebergs. Okay, if the Bookmap was long time ago, it was saying, oh, we have a native icebergs. Then they changed the name. It's not native anymore. It's simply icebergs. And they call it I forgot the name of that. Some kind of whatever it's not natural. Okay, dude, natural is not native. They simply playing for responsibility. Okay, they can't detect the native. So the native is a one type of the indicators that's supplied by the CME exchange, and you need to detect it. You cannot calculate it. If somebody like this guy is saying we're calculating it, yeah, go ahead, buddy. Okay, sorry for you. Okay, so now what my point is indicators needs to be built based on the detection of the icebergs or the MBO or the level 2 data, not simply on the guesstimation, because there's a bunch of indicators on the Ninja that Ninja itself have it on its platform. It is kind of like a proximity, really good proximity, like a trade detector. Is actually like a good proximity, but it's really far from being the big trades indicator, or we call it now smart trades, because we want to differentiate from all of this crap. Okay, it's not only big, it's also in smart, because we now can detect the high frequency and we can detect precisely where those big orders are. Okay, so we don't want to have the same name, because the name on the indicators, anybody can call it whatever they wanted to, freedom, but be just careful what kind of indicators you buying. Definitely there's only one true source. Why? Because number one, what do you need? You need to think about the trading platforms. Just today, I seeing the fascinating looking, sexy, pretty, nice, juicy indicators on the trading view for the level 2, for the order flow. I actually spoke with them. I spoke with the person who actually coding those indicators. I exchanged. There is a email exchange between us. We chat, and what they're saying, dude, it looks good, but the trading view is the platform for the beginners. Okay, it gives you nice visual, but it's not capable like Ninja trading platform to detect and to produce accurate information, for example, from the data, like we using the rhythmic data. Okay, one of the most reliable data sources. There's a couple other sources, but this is the most reliable sources. So there is a platform that is built for order flow, and this is the Ninja Trader coming in place. And the TradingView is not built for the order flow type of indicators. It's the fade now. It's such a popular topic right now that everybody want to jump and swing into the order flow. And they wanted to use like, doesn't matter, because if you're using the TradingView platform, you need to buy the highest level, 40 or 60 bucks, whatever. And then you need to buy the CME data even if you buy and join the CME data from CME exchange, it's not capable to read and produce you accurately. Okay, it's not capable. It's not the purpose of the TradingView platform. It's not capable to process the data correctly. Even it looks juicy and sexy. So there is a one platform that is meant for the order flow, and there is another platform that is not meant for order flow. Okay, do you understand that? That this is the number one what people needs to know about that, because TradingView, I was using TradingView because it's really easy to chart, easy to draw, it's very sexy, it's very cool. But you need to pay and overpay and overpay and overpay and overpay. And bottom line is that those people who actually programmers for the order flow, that indicators that they sell on the TradingView, they're saying it's not reliable because that platform is not built for order flow. And definitely there is no MBO indicators on the TradingView. There may be a 20 years behind. So select the right platform. And Ninja, there's a bunch of other platforms. If you wanted to use other platform, go ahead. You're not only locked to the Ninja Trader platform, but Ninja Trader is what's interesting about the Ninja, that there is an ecosystem with hundreds and hundreds of developers, hundreds of people who are developing new indicators, and you can put like a gazillions in amount of the indicators for your order flow, gazillions. And the deep charts, deep dome never will match it because there's only one person with their father. Okay, there's two people developing. That's why they're always behind. You can actually make a screenshot of this because this trading platform that built for order flow is capable of processing data correctly, multi-second level precision that the TradingView never does it, okay, and use the raw detailed exchange data, while the TradingView most of the time use historical time-based candles, okay. This is what the developer actually told me, and it's a very low accuracy chart to compare with the Ninja Trader example, and it is a highly accurate data reflected on the indicators. So there's a bunch of indicators over here that you can see on the Ninja Trader, and unfortunately, you cannot see Heatmap, you cannot see icebergs or MBO indicators right on the TradingView. Unfortunately, that's the case. Okay, so now, but if you're really desperate, you can use it whatever. You can use whatever. You can use the sky if you wanted to. And some people successful with that. Okay, now register for what you steps. Register for a free, absolutely free. Guys, again, I recommend you listen to me twice. What I'm gonna say: never pay for the Ninja Trader unless you really need it to. Start with the free platform. What you need is, if you're a serious trader, then it is the low commissions that the Ninja provide. No other platform out there, no other ATAS, deep chart, deep dome provide you low commissions for entry to in and out, to execute and get out of the trades, in and outs. That's only the Ninja platform. And when you're a heavy trader, you're a serious trader, you already have skills, go ahead and do that. Okay, if that is the commissions you're concerned about, then Ninja Trader is actually the best in terms of the commissions. It's super duper. Now, if you need a step-by-step guide how to connect the data, any data, level 1, level 2, whatever there is on the bestorderflow.com website, there is a user guide, menu, user guide. Go over there and see. There is a specific step-by-step recommendations, and you can spend your time out there. What is my conclusion? My conclusion is we need to be a little bit selective, not a little bit, seriously selective when we're selecting the platform, when we're selecting indicators, and when we listen somebody is teaching you about the order flow.